All right, let's talk about Thermo Fisher Scientific. The science and tech giant just wrapped up its 2025 fiscal year, and their latest earnings report just hit the street. So we're going to dive right in and break down exactly what went down.
For anyone even remotely in the life sciences world, Thermo Fisher is a massive name. They're the ones behind the scenes, outfitting the labs that are pushing the boundaries of research and medicine. They provide everything, seriously. To put it simply, they really are the world leader in serving science.
So, coming into this report, the big question on everyone's mind was pretty straightforward. 2025 was a tricky year, right? It threw a ton of economic curveballs and market pressures at everyone. So how on earth did a company of this size manage to perform?
Well, the answer came straight from the top. The chairman and CEO, Mark Casper, basically said, hey, don't worry, we enter 2026 from a position of strength. Okay, bold words, but what does that strength actually look like when you crunch the numbers? Let's get into it.
It turns out that whole position of strength thing was built on an absolutely killer finish to the year. In the fourth quarter, Thermo Fisher didn't just meet what analysts were predicting. No, they completely blew past it.
So, let's talk about the headline number for Q4. We're looking at a staggering $12.21 billion in revenue. Now, that's a huge number on its own, but the really impressive part is how it stacks up against what everyone thought they were going to do.
And this wasn't just squeaking by. They absolutely crushed it. Wall Street was forecasting a number closer to $11.95 billion. That means Thermo Fisher brought in over $250 million more than predicted. That's a really significant upside surprise.
And the good news keeps on coming, because it didn't stop with revenue. When we look at the bottom line, at profitability, the story's just as good. Their adjusted earnings per share, or EPS, landed at $6.57. And if you're an investor, you know this is a huge metric. It's the actual profit they're making for every single share of stock out there.
And yep, you guessed it, just like the revenue, this number was a solid beat. The consensus on Wall Street was $6.44. So the big takeaway here is pretty clear. Whether you're looking at the top line, total sales, or the bottom line, profitability, Thermo Fisher ended the year with a powerful 1-2 punch.
Okay, so a strong quarter is one thing, but what about the whole year? Was this just a fluke, or does it fit into a bigger picture of consistent performance? Let's zoom out and look at the full 12 months.
And yeah, the full year numbers totally back it up. Total revenue for 2025 hit almost $45 billion, which is up 4% from the year before. And check this out, profitability grew even faster. Adjusted EPS was up 5% to almost $23 a share. So this wasn't just some flash in the pan. It was solid, steady growth all year long.
So you've got to be asking, how did they do it? How did they pull this off in such a challenging environment? Well, the company is actually really clear about this. They say it all comes down to a proven growth strategy that's built on 3 core pillars.
Their whole formula boils down to these 3 things. First, always be creating high-impact, game-changing technology that their customers absolutely need. Second, don't just be a supplier, become a deeply trusted partner. And third, use your money, your capital, smartly to buy new tech and reward your shareholders. So let's see how they actually put these pillars into action in 2025.
On the innovation side, wow, 2025 was a massive year. They launched some truly game-changing tools. We're talking stuff that helps advance precision medicine, tech that speeds up drug discovery, and even a brand new, first-of-its-kind system to help doctors diagnose multiple myeloma. These aren't just small tweaks. They're the kind of breakthroughs that cement your spot as number one.
And that trusted partner thing, that goes way beyond just selling boxes. They are forging these deep, deep alliances. For example, they're working with the Chan Zuckerberg Institute on new ways to literally see inside human cells. And then there's the really big one. They've teamed up with OpenAI to bake artificial intelligence into their entire platform. The goal? To literally speed up the pace of science itself.
Of course, none of this incredible innovation or partnership building happens on its own. It needs fuel for the engine, and that's where that third pillar, capital deployment, comes in. This is all about making big, strategic financial moves to accelerate their growth. And believe me, they were not sitting on their hands. In 2025 alone, the company put about $16.5 billion to work. The lion's share of that, about $13 billion, went towards mergers and acquisitions, buying other companies, and another $3.6 billion went right back to shareholders. Now, a huge chunk of that M&A money was for the announced acquisition of a company called Clario. They're a leader in using digital data for clinical trials. This is a nearly $9 billion bet that they can help transform clinical research, making them even more essential to their big pharma and biotech customers.
But let's be real. This amazing growth didn't just happen in a perfect little bubble. The company had to fight its way through some pretty significant global economic headwinds all year long.
So on one side, you had all these challenges piling up: tariffs, wild currency swings, a weak market over in China. But on the other side, Thermo Fisher had their own playbook. They used something they call their PPI business system, which is basically their internal secret sauce for becoming more efficient, to actively manage costs and absorb all those pressures. That's how they were still able to deliver such strong results.
Okay, so that's the story of 2025. An impressive performance for sure. But what does all this mean for the future? Let's take a look at what the company is officially projecting for 2026.
The outlook is really strong. After hitting nearly $45 billion in 2025, they're now guiding for 2026 revenue to land somewhere between $46.3 and $47.2 billion. That is some continued healthy growth on the top line.
And when you look at the bottom line, the forecast gets even better. They're projecting 6 to 8% growth in their adjusted earnings per share. That's a really confident outlook. It tells you they fully expect their focus on efficiency and innovation to keep paying off big time.
And hey, remember that massive Clario acquisition we talked about? Well, the company expects that deal to officially close around the middle of 2026. And get this, once it does, they predict it'll add another 45 cents to their earnings per share in the very first year. That's what you call a materially accretive deal. It's going to give their bottom line a significant boost right from the get-go.
So, when you step back and look at the whole picture, you've got rock-solid performance, you've got this huge bet on digital clinical trials with Clario, and you've got this deep, game-changing partnership with OpenAI. It makes you wonder, are we just looking at another successful company here, or are we watching them build a truly unshakable empire in the world of science? That, I think, is the real story to watch.